How's it going, everybody? I hope you all had a great weekend. My name is Gev. It's Monday, June 29th, so let's talk capital. Alright, guys, so it's going to be a short and sweet video for today. Not much action going on from yesterday's open last night or today in the market. Everything is kind of just pushing sideways. That's basically across the board in all markets. We're basically consolidating right now. We're trying to find what direction we want to head in next here. So, like I said, not much going on. But before we jump into it, leave a like, hit that subscribe button. Let me know what you guys think of the content we're putting out. So, let's go ahead and jump into it real quick. Let's start with the S&P 500. Pretty basic here. We spoke about last week on Friday how the next move is a bounce off the 50-day moving average in the yellow, gold, whichever one you want to call it. That's basically what we've had happen so far. More important thing here is this, guys, where you've basically jumped back above the 200-day moving average, and we've done a piercing pattern here. Although piercing pattern you want to see at the bottom of a drop or a sharp correction. At the moment, I'm gonna take it until it's invalidated. Again, the only reason why is because we pushed back above the 200-day moving average. Basically, can we turn on volume here? If we see volume, we see that volume. It's not good. It's not bad. It's pretty average compared to what's been going on. Um, 3 days showing indecision. Weekly, weekly. Obviously, from last week we spoke about that on Friday. It's looking more bearish than bullish. But what you guys are gonna notice here is we're showing a lot of indecision at key levels here across most markets. That was S&P 500. Let's look at gold. Gold basically doing the same thing, just slowly grinding higher, showing lots of indecision. Not really sure what we want to do here. Again, the reason for that is because the 1781 level is a very big level for gold. Once we clear that, it's a solid $50 move to the next level of resistance. That's why we are having such trouble getting over that right now. But we should be able to clear that this week. We did have a very bullish 3-day and weekly close for gold, especially for weekly. Important thing to note here, guys, is we are one day. Yes, we are one day, 24 hours away from monthly closes on all candles, on all charts. Gold monthly candle looking very bullish as of right now. Let's go back to S&P 500. S&P 500 massive indecision, but still bullish coming off of a rebound like this. Definitely not bearish, I'll tell you that. It's indecision, but it's not bearish. Okay, and the good thing we like is we have some decent volume coming into the monthly candle here too. So gold, I'm sidelined, not touching this guy. I'm not going to touch anything until the weekly candle closes. I'm sorry, monthly candle closes tomorrow, and most likely I'm not going to make a trade this week because I will be out of town from basically Wednesday night until next week. So no point in me getting in any trades, but I will keep you guys up to date on what you can be looking for until then. Weekly, I keep saying weekly. Monthly closes, guys. Monthly closes close tomorrow. Monthly and 6-month candles close tomorrow. So we're halfway through the year. We get 6-month closes. We get monthly closes. So if we were to look at 6-month here, like super bullish on gold, super bullish 6-month close. As you guys can see, we're 19 hours 56 minutes away from that. 6-month candle on S&P 500 looking very bullish here too, getting rejection here. No, this is not a hammer. If anything, this is a hanging man candle. So I guess that's a little bit bearish, more bearish than it is bullish. We basically kind of had a gigantic version of that candle come in. S&P 500 is a tough cookie to crack, guys. These candles and this situation with the whole COVID stuff, it's just tough to crack with this. As you guys can tell, it's getting a very irregular candle here. But we'll see how that closes. Again, 6-month, monthly, and 3-month candles close tomorrow. I mean, we could look at 3-month here too. Push back into thing. That's a piercing pattern. That's bullish. 3-month on gold. I mean, however you look at gold, this thing has been super bullish for a very long time. So that's the good thing. Okay. Let's go over to Bitcoin here before we go jump into our other situations with the bigger stocks. Bitcoin 6-month. The problem with Bitcoin and these 6-month candles is there isn't a lot of data to obviously look at here. We're basically looking at about 12 candles here. But the reason why we're looking at 6 month, and I'll take you guys down to 3 month and the monthly here, is for this reason. If we can get a close 6 month candle above 93.50, that's bullish. Okay, if we can get a 3 month close above 9,500, that is bullish. If we can get a monthly close above 9,300, that's also bullish. Why the different numbers? Because I mean, the way that there's different numbers, but we're in a $200 range. We're basically speaking from 9,300 to 9,500. So it's a $200 range. We got about 22 hours, 23 hours to make up $300 worth of ground here. Not that it's not likely, but it's not looking great right now. It could happen. Bitcoin's done crazier things in shorter amount of times, right? But as of right now, it's not looking that great. So one thing we don't want to see for sure is we do not want to see this monthly candle specifically close like under 9,000. That's going to be very bearish. That's going to set us back up basically to come to 7,700 at minimum. Okay. Now, if we go down to daily here on Bitcoin, you guys can see we bounced off of two very important trend lines here. Okay, we bounced off of this trend line that basically gave us our first bottom here and launched us up to 13,000. That then held support here until COVID broke us. So we're holding support on that trend line. Okay, more importantly, we're holding support on our downtrend here too, on the 3-year downtrend, basically coming down. Now, one thing that I'm going to show you guys, actually, let's talk about the volume signature, and then we'll jump into that last thing before we finish up the video here. Volume signature is this. So since our $3,800 bottom, we haven't had a volume break of this downtrend, right? Now, this basically means we've been consolidating and trying to find a direction to go in. Okay, once we get a significant break, and what I mean by significant break, I'm talking about something like at least 35,000 to 45,000 Bitcoin volume candle here. As you guys can see, the 30K, 40K number here is the amount of Bitcoin being traded in one volume. So if we get a nice spike up here, something like this, that's a clear decisive break of the consolidation pattern and leads us into things. So if we get this break, that means if we get a volume spike like that, that means we've broken one way or another. Okay, because you're breaking out of this current trend that we're in. That's what would happen here. Now, what do I think is going to happen? Well, as I've been telling you guys, I've been bullish. I'm going to stay bullish until we get a break of that. And for the reason is simply this. If we go take gold on a weekly chart and we drop the same type of downtrend that we have on Bitcoin, where we don't just include the wicks, okay, right? If we go monthly, you guys can see how the wicks are up here, right? We're including the bodies. Remember, the bodies are more important than the wicks when it comes to long-term trading. So when we go weekly and we drop this trend line, actually I've dropped it from monthly. So if I drop it from monthly, touching bodies only, what we get is a break and then just consolidation on the trend line till we skyrocket, right? That's what you see. So we have a tap, and then we have a break, consolidation, move higher, right? If we go Bitcoin weekly, we have tap, right? I have this yellow one. Just think, one of my friends likes to call this Japanese precision, when you only have the wicks when you only have the wicks touching. The reason I call it Japanese precision is because these are called Japanese candles. They're the ones who came up with the whole idea, right? So that's why he calls it Japanese precision. The only reason why I have it is because a break of this yellow trend line is the ultimate sign of a bull market. But by that time, we already know we're in a bull market. So kind of irrelevant trend line, but hey, that's where it is. But let me tell you guys why this is so much like gold, right? So we have a tap. We got a third tap, reject down to the 200 moving average. We came up, we broke it, and we've just been consolidating on this trend line, right? The important thing to realize here is, look, as we're consolidating, we're pushing lower too, right? As we're consolidating, we're pushing lower too. This is basically identical to me to the gold pattern that sent it moving higher, $400 now, $300, you know. So hopefully we can get that same pattern to play out on Bitcoin. Okay, so things to watch are tomorrow's monthly, 3-month, and 6-month candle closes. Those are going to be a telltale sign of how these markets are going to lead going into how these markets are going to move going into the second 6 months of this year. Okay. As always, guys, thank you for watching. I will be back with you guys prior to the close tomorrow of Bitcoin's monthly candle. It closes at 5, so I'll be making the video around 4:30 so we can know exactly what the hell's going on. Until then, I hope you guys have a great day. Thank you.